All right, so in this question, we are converting the company's cash basis net income into an accrual basis net income. So basically what this is saying, for those of you who are still a little unfamiliar with the differences between the two, for cash basis, net income is going to be considered income when the cash is actually collected, whereas for accrual basis, you're going to be recognizing income when the income is earned. So it's not necessarily when the cash is collected. So when we're converting cash basis to accrual basis, there might be some adjustments. So let's go through each of these and see what those adjustments might be. All right, so we're starting with 75,000. So 75,000, 75,000. What is the impact in the increase in accounts receivable? So an increase in accounts receivable for the cash basis method just says that we are going to be decreasing our cash collected today. Basically, we made a sale on credit. We're receiving the actual cash flow at a later point in time when they pay it. In which case we would switch out the receivable for cash. But long story short, increasing receivables on the cash basis is going to decrease cash today and therefore increase the accrual basis income. We're still earning that income when we make the sale. So we're not going to be necessarily decreasing cash, or it's not going to have any sort of impact when we receive the actual cash. We already earned it. We're still going to increase it. What about a decrease in prepaid expenses? So a decrease in prepaid expenses just says that we are still going to be incurring the expense. We have earned it essentially. We're incurring the expense as time goes by. So a decrease in prepaid, we're not actually recognizing the expense when we receive a prepaid on the accrual basis. We're not recognizing the expense until it is earned or incurred. So for example, if somebody prepays rent on an office, you're not going to be recognizing that expense until the time passes in which they have occupied the office space. So the decrease in prepaid still means that we are earning that expense. Therefore, we're going to be decreasing net income. What about accrued liabilities? So a decrease in accrued liabilities is basically just saying that we're spending more cash than we're actually accruing liabilities in the current year. So this is going to be added to net income. We can now calculate our accrual basis net income. It is $77,500.